I hope you weren't caught headline reading the impressive growth at Glanbia Performance Nutrition for the first half of 2021 because it might not be telling you the whole story. On August 12th of 2021, Glanbia did release its first half of 2021 earnings. So I will be utilizing that financial information, the accompanying earnings call, also any publicly disclosed information to obviously update you on Glanbia and specifically Glanbia Performance Nutrition, their brand active nutrition, performance nutrition portfolio, but also provide a ton of insights to the global sports and active nutrition markets. But let's just kind of start with some high-level financial information. In the first half of 2021, Glanbia had wholly owned net revenues that grew 20.3% on a constant currency basis. And what kind of makes up that 20.3% growth would be 18.5% coming from volume. Pricing was also up 0.9%, and then there was also another 0.9% that came from mergers and acquisitions activity. For those that might not be too familiar with Glanbia, there's actually two wholly owned segments, and let's cover the Glanbia Nutritionals quickly first, because I don't particularly spend too much time personally on this division, though it's an extremely important part of the overall Glanbia business. So Glanbia Nutritionals is made up of U.S. cheese business and Nutritional Solutions. Revenue was up 17.1% year over year on a constant currency basis, and that's coming from 17% volume increase, but they did have pricing pressure of 1.1%, and then acquisitions benefited the comparables at 1.2%. The growth strategy overall of the Glanbia Nutritionals segment has been focused on protecting the house, or mostly the protein solutions. They're also interested in expanding the core platforms through international innovation and mergers and acquisitions activity, and focusing on sustainability, partnerships, and global reach. Now, Glanbia Performance Nutrition is the segment, the wholly owned part that I focus a ton of attention on and what you guys will hear about pretty much all the rest of this content. Revenue for the first half of 2021 increased 28.1% year over year on a constant currency basis, and this is coming from both strong pricing and volume increases at 22% and 5.6% respectively. They also benefited from 0.3% of an acquisition that I'll kind of talk about a little bit later. Touching on the comments from the introduction, here's where potentially just headline reading could get you in trouble. Glanbia Performance Nutrition's revenues, and this is not necessarily from a like-for-like basis or a constant currency basis. I didn't do all of those calculations, and these numbers are going to be in euros because Glanbia is an Irish-based business. But if you look at the first half of 2019, Glanbia Performance Nutrition had net revenues of 620.1 million euros. Now, you look at 2020, the first half of that, and you see them kind of having a really tough time because of what was happening with the COVID-19 pandemic. The first half of 2020, that revenue was 532.4 million euros. So definitely some struggles there. Now, if you look at 2021, the first half, net revenues for Glanbia Performance Nutrition jumped up to 638.4 million euros. So all in all, in terms of a 2-year stacked basis, growth rate of Glanbia Performance Nutrition, like I said, this isn't like for like or looking at constant currency or doing any of those calculations. Just on a reported basis, you're only looking at about 3% growth on a 2-year stacked basis. Now, if we break down the Glanbia Performance Nutrition revenues by the two new kind of sub-segments or regions, you have the Americas, which is made up of North and Latin America. This is 2/3 of the overall Glanbia Performance Nutrition's portfolio. Like-for-like revenues increased 23.8% year over year in the first half of 2021. You had volume increases that were broad-based across all channels and brands. And I'll speak a little bit more on Optimum Nutrition and SlimFast later in this content, but the company also commented positively on Think, Amazing Grass, and the Isopure brands that all delivered strong growth. Now, the international section is about 1/3 of Glanbia Performance Nutrition. Like-for-like revenues increased 37.2% year over year in the first half of 2021. There was price improvements that were broad-based. You had volume growth across all regional markets, particularly in quarter two. Asia and the Middle East delivered particularly strong results. And this is all coming from the easing of COVID-19 related restrictions and the resumption of consumer activity and fitness routines that created significant momentum on this side of Glanbia Performance Nutrition. Now, while there's several other brands within the Glanbia Performance Nutrition portfolio, it really has become a two-brand portfolio. Almost 3/4 of Glanbia Performance Nutrition revenue is now made up of Optimum Nutrition and SlimFast. SlimFast, the consumption was up 6.6% in the 12 weeks to mid-June of 2021, as weight management headwinds still are causing some pressure on the brand. Fact is, consumers haven't re-engaged with dieting as of yet, but this is a short-term speed bump in my opinion, and SlimFast has a strong brand equity which will capture a strong portion of that demand when it shifts back into dieting season. Optimum Nutrition, on the other hand, had strong performance overall within the tracked channels within those same 12 weeks that ended mid-June of 2021, which was up from a consumption standpoint of 30.5% year over year. And the brand is benefiting from its strong position in the category, ongoing marketing investment, and broad-based positioning. Glanbia has really focused on gold standard whey and amino energy and is doubling down on the highest returning media investments. Now, if we look at sales by channel for the first half of 2021, and we're looking at this from a global perspective, you have food, drug, and mass that makes up 33% of the sales. That channel saw 7% year over year growth. Online makes up 31% of the sales, and that channel saw 21% year over year growth. Distributors make up 22% of the total sales. That channel saw 123% year over year growth. And since we are looking at this globally, the bulk of that growth is coming in the form of international master distributor relationships that had terrible comps in the first half of 2020. And then specialty makes up 14% of the total sales, and that channel saw 38% year over year growth. And this kind of rolls into the more broader kind of Glanbia Performance Nutrition strategic transformation project. If you guys have been consuming my content over the last few years, you know that I was arguably the loudest voice publicly telling Glanbia that they needed to do an extensive strategic review of Glanbia Performance Nutrition in 2019. So before they announced a formal transformation project in late 2019, early 2020. And just to remind everybody kind of what that transformation project looked like, they simplified the product portfolio, they streamlined route to markets, they exited practically all of their private label contract manufacturing, they reorganized business across the Americas and international regions, and align their resources to growth opportunities. Glanbia leadership is applauding this transformation project as a key part of its volume, price, and margin progression across this year. Now, one overhanging item that was on my transformation plan for Glanbia Performance Nutrition was that I wanted them to look at the sports nutrition kind of section of their portfolio and make a divestiture. Basically, I wanted them to get rid of BSN, the brand that is now cannibalizing Optimum Nutrition. Glanbia has not had an answer in terms of how to differentiate that product rightfully and really kind of give that its own kind of platform. And because of that, I think it's time for them to sell this off to probably a private equity firm that has some vertical integration assets already. They can kind of pair that together. They can get some additional efficiencies out of there. But the longer that Glanbia waits to make this move, arguably the value of it goes down from a mergers and acquisitions value perspective, but it also would continuously create some issues in terms of resource allocation within Glanbia. So need to clear that out. But all that being said, Siobhan Talbot actually maybe made a little bit of a tip of the hat that maybe they are looking at some opportunity like that. She made a comment that she said as they get through the end of this year and going into next year, they are going to be commenting a little bit further on the performance nutrition, sports nutrition kind of strategy and innovation plan. So I might be getting my kind of wish or what I've been pleading to Glanbia Performance Nutrition. Maybe they've actually been listening to me and we will see a move. They have not, to my understanding, ever actually divested a brand, so this will be new to them, and maybe it's not something they're too familiar with, but I do think they're going to need to make that move with BSN soon. Now, within the last piece of content that I had around Glanbia, I was talking about how they had a strengthening balance sheet, and because of that, they needed to use that for mergers and acquisitions activity. They needed to kind of look at some strategic kind of needs that they had in their business. One of those being to strengthen the transformation within their business around digital and kind of the shift or the acceleration of the digital shift. And on May 31st of 2021, Glanbia actually completed the acquisition of a 60% stake in LevlUp, a direct-to-consumer gaming nutrition brand that was started in 2018 and is based in Germany. Glanbia has the option to acquire the remaining 40% stake by 2025. Operating in a high-growth market, LevlUp's product portfolio offers a range of ready-to-mix powder products to gamers and esports athletes. The business is said to be highly complementary to Glanbia Performance Nutrition's direct-to-consumer business, and the investment provides Glanbia Performance Nutrition with a presence in the rapidly growing adjacent gaming nutrition category, expanding its reach to new customers. LevlUp's consumer base is largely in Germany with a growing presence in adjacent European markets. This isn't exactly the most splashy mergers and acquisitions kind of transaction. Even if LevlUp hits the projected kind of 30 million or so euros in 2021, it still would be only around like 2% of Glanbia Performance Nutrition's portfolio. But the risk reward is light on both sides. This is really a learning opportunity for Glanbia to get into a new market. They can kind of dip their toes in there. They have to also kind of pay attention to the competitive landscape. You have MyProtein that is launching their own, or they have launched their own gaming sub-brand. So Glanbia has to kind of step up their game and look at the esports or gaming nutrition market. And this gives them the opportunity to see how the LevlUp business responds to the additional kind of resources, integrations that are available at Glanbia Performance Nutrition. And if you look at kind of the price of this deal, it values the company a little bit north of 50 million euros. And at that probably 30 or 35 million euro revenue rate in 2021, they're only paying about 1.5 or 1.7 times that revenue in 2021. So it's not that much overly priced. Honestly, it's pretty decent for these types of business in the current environment. So I just want to end on some final thoughts. And this is going to be a little bit different than I normally kind of focus on in these final thoughts. It's usually just kind of some recap or just kind of some extra oomph that I want to throw at the end here. But I actually want to talk about a question that was asked during the earnings call. And this was around the synthetic bio industry and if that would have any effect on the legacy whey protein exposure that Glanbia is built around. And I stated in that last Glanbia earnings content video that I thought they needed to get a lot more in tune and kind of really figure out how are they going to play a part in the future of the functional CPG space. And I was talking about this in the sense of personalized nutrition and how it's kind of odd that Glanbia doesn't have any exposure to that yet. But the same could be said around the synthetic bio industry. The answer that they gave to this question really was a little bit apathetic or just kind of lethargic, honestly. And it shows a little bit that Glanbia still has a ton of legacy mechanical thinking in terms of their business. And for me, you're looking at similar kind of trends that have happened or patterns that have happened in the past that could come and catch up to them in the next maybe 5 to 7 years. I really think Glanbia needs to look at just the culture within the company and think about this in the sense that capital allocation needs to be done less towards share buybacks and more towards putting that money to work and ensuring that they have a strong future market leadership position. I hope you guys enjoyed this piece of content. If you have any questions about Glanbia or just kind of the global nutrition landscape as a whole, please comment on this piece of content or reach out to me on any of my social media accounts.